Now, just as of recently, I posted this tweet on my X account at Devoted Dividend, so definitely follow me on there if you guys don't already. But I basically made a simple pie chart, nothing revolutionary here. It says the perfect $25,000 long-term stock portfolio, and it shows 5 different ETFs with a 20% allocation each. And then I lastly said that it offers some growth and a ton of income from day one. So in this video, we're going to be going over this very simple yet ultra effective, in my personal opinion, $25,000 long-term portfolio, which offers the potential for income and growth from day one. Now, honestly, this is the perfect allocation for a long-term portfolio, like I said, in my opinion. And I personally wish I would have came across a tweet like this or a video like this in my early days of investing. So if you want to dig into this portfolio with me, make sure to stick around, drop a like down below, and let's get right into it. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So the first 20% allocation in this long-term portfolio, the perfect portfolio in my opinion, is going to be a 20% allocation into the Investco QQQ ETF, which helps empower your portfolio with innovation. Now it says right here in overview, Investco's QQQ ETF tracks the NASDAQ 100 index, which is one of the fastest growing indexes across the entire market. Now with this, it gives you access to the performance of the 100 largest non-financial companies listed on the NASDAQ. The fund and the index are rebalanced quarterly and are reconstituted annually. Now, the performance of QQQ has been outstanding. It says since launching in 1999, Investco QQQ has demonstrated a history of outperformance, typically being the S&P index. And it says right here, plus 405.91% more returns than the S&P over this period. Now, this also shows that since this period, this ETF is up 1,025%, which again is why this ETF is so popular, because it offers some massive growth potential. Now, because of the exposure that the QQQ ETF offers investors, I think this ETF could be perfect for the growth portion of a long-term portfolio. You don't have to waste time stock picking. This ETF is going to track some of the fastest growing companies across the entire markets. Now, speaking of growth, my next 20% allocation would have to be in the Schwab US Large Cap Growth ETF, or ticker symbol SCHG. This is one of my favorite low-cost, high-growth ETFs across the entire markets. Now, this is an ETF, again, if I just started off investing, if I was looking to build a long-term portfolio, especially if I was relatively young, I would definitely look into something like this. It says the objective for SCHG, the fund's goal is to track as closely as possible before fees and expenses the total return of the Dow Jones US Large Cap Growth Total Stock Market Index. Now, this ETF, like we said, is low cost. It only costs 0.04% to hold on to, and it gives you exposure to some of the fastest growing names across the entire market. Names like Apple, Nvidia, Microsoft, just these 3 names alone make up around 30% of the ETF. So if you want exposure to names like Apple, Nvidia, Microsoft, Amazon, Meta, Tesla, Broadcom, etc., this ETF is going to give you low cost exposure to some of the best growth names, which are probably going to help your portfolio grow significantly. Now, since inception, this ETF year over year is up around 16+%, certain years up as much as 45%. The performance of some of these high quality growth funds are outstanding, which is why I would definitely make at least a small portion of the portfolio very growth heavy. The next 20% portion of the portfolio, like I shared with you guys on the tweet, would have to be SCHD. Now, the cool thing about the Schwab US Dividend Equity ETF is that this ETF offers some growth, but also a lot of dividends from day one. We're talking around a 3.3% starting yield, but also an ETF that, at least historically, has paid more and more in dividends year after year significantly. Now, at least in my opinion, having a portfolio that's sort of balanced as far as growth and also income producing is going to be very important, because at least speaking for myself, I at some time in the future want to live off my dividend income and not have to draw down the portfolio, not have to sell off assets just to pay my bills. So by utilizing a 20% portion of something like SCHD, which again offers a ton of growth but also a ton of income from day one, it's going to be a crucial aspect of the portfolio, and is why I would make up 20% of this one. Now, as far as performance goes, SCHD has also performed very well. Some years up around 29%, but on average up around 13% year over year. Now the number 4 ETF that I would include in my 5 ETF portfolio, very simply a very effective portfolio that offers a ton of growth but also a ton of income, would have to be the Amplify CWP Enhanced Dividend Income ETF, or ticker symbol DIVO. Now this ETF is a little bit different than the other ones that we talked about because it is a little bit more income focused. It does offer a higher starting yield, which is again going to be very important to some investors' portfolios more than others. Now DIVO invests in a small basket of stocks, around 24 different names as of right now, but then along with that utilizes a cover call strategy on individual names, which is going to allow this portfolio to potentially offer a ton more in dividend income for investors from day one. Now that's very obvious right here when you see the distribution rate. We're talking a 4.8% distribution rate, which again is much higher than that of SCHD, SCHG, and of course the Qs. But the cool thing is that even though DIVO offers a lot of dividend income and is somewhat more income focused, you're not going to necessarily give up your gains. We're seeing around a 12.74% annualized percentage return as far as DIVO goes, and this is since inception. So even though DIVO is going to give you exposure to a 4 or 5% yield, right off the bat, it's going to also offer you a nice positive total return, or at least it has historically. So those are a few of the reasons on why I would 100% include DIVO in my long-term portfolio, and is why I personally do have a ton of DIVO in my long-term portfolio, because again, it offers the perfect balance of growth and a nice balance of dividend income from day one. Now the last and final ETF that I would personally add in a 5 ETF portfolio, and what I would consider a crucial part of a portfolio, especially for the needs and objectives that I'm looking for, is including JP Morgan Nasdaq Equity Premium Income ETF, or ticker symbol JEPQ. Now this ETF is going to offer a much higher starting yield. We're talking around a 10 to 12% yield, depending on what time frame we're looking at. Now we talked about JEPQ on multiple other videos, and definitely guys check out my other videos if you want to see any deep dives into all these ETFs, because that's pretty much all we talk about on this channel. But JEPQ utilizes the Nasdaq 100, then with a cover call overlay, offers massive dividends on a consistent monthly basis to investors. For an ETF that costs in the high $50 range, we're talking a 50-cent more or less dividend that was paid out over the last 6 or so months if we were to average things. So this ETF is not necessarily going to offer you as much growth potential, but it is going to offer you a massive amount of income right from day one, which is going to be crucial if you, like myself, want to utilize dividends and income later on in the future to pay for things like bills, or to just reinvest and compound your portfolio even larger. Now, I personally would never have my entire portfolio made up of something like JEPI, but I also would never have my portfolio made up of entirely the QQQ ETF, for example. And that's just because for me personally, I want to have a nice balance of both growth and income focused investments, which is basically what you see right here in my long-term portfolio. For example, I have 1,499 shares of DIVO, but I also have 1,001 shares of Apple stock. And that's just because, again, for my personal objective and my strategy when it comes to investing, I want to have some income focused assets and some growth focused assets. But again, whether or not you want more growth or income is totally up to you. So now that I share with you guys my very simple yet very effective 5 ETF portfolio that offers massive amounts of growth and massive amounts of income for day one, I lastly want to hear from you guys down below. If I were to ask you to choose just one ETF as of right now to buy for 2025, what's the number one ETF that you're either looking into already or maybe buying? Drop the ticker symbol in my comments down below. If you guys enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.